Judging from the performance of the U.S. middle market, America's economic expansion hasn't run out of gas. Indeed, the middle market's first quarter in 2016 showed performance that ticked up a little bit compared to the quarter before, and confidence of these companies rose with it. I'm Tom Stewart, the Executive Director of the National Center for the Middle Market at The Ohio State University Fisher College of Business, and I'm here to discuss our middle market indicator for the first quarter of 2016. Data for this study were collected in the first 2 weeks of March of this year, so they're very, very current. The middle market indicator, the MMI, is a pulse check for the 200,000 companies that have annual revenues between $10 million and $1 billion a year. Collectively, these companies account for about a third of the private sector's GDP, contribution to GDP, and its employment. Now, this middle third gets less attention than small business does or big business does, despite the fact that we've seen demonstrated quarter after quarter after quarter that it is the strongest source of job creation in the United States and the most dynamic source of economic growth. The National Center for the Middle Market exists to help fill that knowledge gap. As part of that mission, every quarter we survey 1,000 executives, senior executives, from the middle market, chosen to be representative of the sector in terms of size, geography, industry, so on and so forth. We ask them about revenue, jobs, profitability, investment plans, confidence, and challenges. Here's what we learned. Looking at the results from the middle market indicator for the first quarter of 2016, let's start with top-line performance, revenue. Year on year, average revenue growth for middle market companies in the United States was 6.3%. This is a good news number. It's a number that any developed economy would be thrilled to have overall, and it marks the 9th consecutive quarter, more than 2 years, of top-line growth above 6%. It's also 0.2 of a point above what we found in the fourth quarter of 2015. In 2015, last year, for the most part, we saw an easing in the rate of growth. Growth continued, but the slope of the curve was flattening a little bit. Now that slope has stabilized. It's no longer flattening. In fact, it even tipped up just a little bit more, rather than showing a continued easing. Now, this performance was led by financial and business services, but we also saw surprisingly strong growth in manufacturing, 6.6%. Year-on growth by middle market manufacturing companies despite the drag or the headwinds from a strong dollar. Revenue growth then is stabilizing at a very good number. Let's turn to what the first quarter 2016 middle market indicator tells us about job creation. In the first quarter, job creation continued to show the same strong pace that it showed in the fourth quarter of 2015. On average, middle market company payrolls increased 3.6%. on an annualized basis, exactly the number that we saw 3 months before. That's a very good number. To put it in context, big business payrolls grew at a 2.2% rate over the last 12 months, and in small business, net job creation was about 2.1%. A back-of-the-envelope calculation tells you that mid-sized companies, this middle third of the private sector, contributed about 60% of all new jobs. Now, this pace of hiring is not as fast as the pace we saw about 12 months ago, but it's taking place in a tighter labor market. Executives tell us that finding and retaining talent is one of their top 3 short-term challenges, and it's their number 1 long-term challenge. They don't expect to be running out and hiring a lot more workers. These forecasts are steady, the forecasts for new hiring. But this quarter saw a noteworthy shift in what companies intend to do to get and keep the employees that they need. Offering higher salaries ranked first, as it has before, but the percentage of executives saying that offering higher salaries was their first choice leapt from 43% to 52% compared to the last quarter. So raises may be in the offing. And yet at the same time, fully 87% say that they expect profit margins to stay the same or actually to increase. So it looks like wage increases are not squeezing profits, at least not now. With stable, strong growth and costs under control, confidence among middle market executives jumped significantly in the first quarter of 2016. 81% of executives evince confidence in their local economy, which is up from 76% in the quarter before. The national economy inspires confidence in 73%, which is up from 67% 3 months ago. And even the global economy, where we see slow growth in China, flatness in Europe, and trouble in Brazil and a few other places, even there it looks good to 51% of middle market executives, which is up from 47%. Now, one reason for the middle market's confidence is that it is tempered by caution. Executives are determined to look before they hire and to look twice before they open the purse strings to investment beyond their core businesses. R&D budgets are basically flat. Appetite for acquisitions is essentially the same. You won't see a burst of new advertising, but what you will see is renewed and increased investment in the core business. 22% of middle market executives told us that they intend to expand capacity or build a new facility in the year to come, which is a big step up from the 16% who added to capacity in 2015. As executives look ahead into an election year and one in which there are uncertain signals about the cost of capital, the pace of economic growth, certain global conditions, the U.S. middle market retains its position as emphatically the place to go for growth and competitiveness, a powerful force driving expansion and job creation, and a cohort of companies that merits the close attention and support of all of us. Our website, middlemarketcenter.org, posts the entire middle market indicator, the data I've summarized here, the full report, and also raw data for this and all previous middle market indicators. There's no cost to access that data. There you will find, in addition to the MMI and its data, lots of other research from the Center about such topics as building top teams, digitization, and creating a more effective sales force. The URL again is middlemarketcenter.org. For the National Center for the Middle Market, I'm Tom Stewart.